Greetings, tax tip lovers, and welcome to this week's top property tax tactics in just 5 minutes. Come, gather around, people, and let me share with you a summary of what I believe the Chancellor likely has in store for buy-to-let landlords and property investors in 2021, and how you can still prepare. COVID-19's put a huge strain on public finances, likely with more to come, and government borrowing is already at a peacetime high, with spending cuts and tax rises all but certain. The tax world appears to be anticipating a range of changes in the budget on March the 3rd, and none of them for the better, at least not from the perspective of property owners. Popular opinion seems to predict an overhaul of capital gains tax and a one-off tax on assets, including property. And who knows what will happen when the temporary stamp duty holiday comes to an end. So let's run through what we know and what we think we know, and maybe speculate a little. In July of 2020, the Chancellor told the Office of Tax Simplification to opine on whether capital gains tax is fit for purpose and whether it could be, you've guessed it, simplified. Here's the suggested simplification: increase CGT in line with income tax and reduce the annual allowance. The OTS recommends that capital gains tax on buy-to-let properties should rise to 20% for basic rate taxpayers and to 40% for higher rate. And if that's not simple enough, then how about the recommendation that the CGT annual allowance is lowered from 12,300 to just £2,000? It's my guess that when that happens, it'll impact buy-to-let landlords and second homeowners, and likely there'll be a mini boom in property sales before legislation comes into effect. Let's hop over to the Wealth Tax Commission and see what's happening there. Well, the proposal is for a one-off tax on individuals with assets worth more than £500,000, or £1 million for married couples, instead of raising income tax or VAT. And you'll like this. The Wealth Tax Commission wants to include main residences, that's your home, and your pension pot, and says that a 1% tax on assets should raise the required 260 billion over 5 years. And that might be interesting for those who are asset rich and cash poor, particularly if property prices are falling. So that just leaves the temporary stamp duty holiday, which supposedly ends on the 31st of March. Now, let's be fair, it's a bribe which has worked and has boosted the property market, probably artificially, with record numbers being achieved. And we've all seen there are already significant delays with property transactions, with lenders and conveyancers coming under pressure ahead of the deadline. While the housing minister's on record as saying the scheme won't be extended, I don't think too many of us will be surprised if that becomes just the next in a long list of U-turns. So how might all of this affect property landlords? Well, I'm guessing that two things will happen. Landlords will adapt, as they always do, and may well just decide to hang on to their properties, probably depending on their debt to equity ratio. Now, here's the thing. If property prices fall, as many predict, then the tax cost of selling will also fall. And maybe it's time for a review of your existing tax and associated planning, because by maximizing every legitimate allowance and exemption, and by utilizing tax planning enabled by UK legislation, and those are all listed on our website at Rethink.Tax, there are plenty of opportunities to optimize your property portfolio for the benefit of you and your family. There's still time to plan, and there's plenty that can be done, but it's time to take action, and you just need to get off your arse and start the process. There are just two costs. There's the cost of doing nothing, and that's likely about to double, or the cost of doing something where the initial conversation is at no cost to you. If you believe your existing team is best placed for the job, then give them a call. But if it's time to take your property tax planning up a level, then here's how. You can do nothing and stay in the exact same place and pay a shed load of tax unnecessarily, or you can follow the link above for a free Power Hour review with property tax experts who are ex-PwC and ex-HMRC, and will make your property tax planning like it was our own. Okay, that's it. Keep calm and catch you again for breakfast next week. Ta-ra.